with highest ever sales and record profitability. In the financial overview section that I will cover today, all the amounts are translated into US dollar at a convenient translation rate of rupees 83.08, which is the rate as of 30th September 2023. Consolidated revenues for the quarter stood at rupees 6,880 crores, that is $828 million, and grew by 9% on year-on-year basis and by 2% on a sequential basis. The growth was driven by the generics business mainly in US and Europe. Consolidated gross profit margin for this quarter has been 58.7%, a decrease of around 40 basis points over previous year and broadly flat sequentially. Gross margin for the global generics and PHI business were at 63.6% and 17.8% respectively. The SG&A expense for the quarter is rupees 1,880 crores, which is $226 million, an increase of 13% year-on-year and increase of 6% quarter-on-quarter. The year-on-year increase is primarily on account of investment in sales and marketing, digitalization, and other business initiatives. The SG&A cost as a percentage to sales were 27.3% and is marginally higher by 106 basis points year-on-year and 105 basis points quarter-on-quarter. The R&D expense for the quarter is rupees 545 crores, that is $66 million, and is at 7.9% of sales. Our R&D investments are driven by ongoing clinical trials on differentiated assets as well as other developmental efforts to build a healthy pipeline of new products across our markets for both small molecules and biosimilars. The EBITDA for the quarter is rupees 2,181 crores, that is $263 million, and the EBITDA margin is 31.7%. Our profit before tax for the quarter stood at rupees 1,913 crores, that is $230 million, an increase of 19% year-on-year and 4% over previous quarter. The net finance income for the quarter is rupees 123 crores. Effective tax rate has been at 22.6% for the quarter. The effective tax rate was lower than the previous year, mainly due to adoption of corporate tax rates under Section 115BAA of the Income Tax Act of India. We expect our normal ETR for the year to be in the range of 24 to 25%. Profit after tax for the quarter stood at rupees 1,480 crores, that is $178 million. Reported EPS for the quarter is rupees 88.8. Operating working capital reduced by rupees 598 crores, which is $72 million, against that on June 30th, 2023, mainly due to decrease in receivables. Our capital investment stood at rupees 322 crores, which is $39 million in this quarter. The free cash flow generated before acquisition-related payout during this quarter was at rupees 1,447 crores, which is $174 million. Consequently, we now have a net surplus cash of rupees 5,906 crores, which is $711 million as on September 30th, 2023. Foreign currency cash flow hedges in the form of derivatives for the US dollar are approximately $648 million, largely hedged around the range of rupees 82.9 to rupees 84.5 to the dollar, ruble 2475 million at the rate of rupees 0.98 to the ruble, and Australian dollar 2.7 million at the rate of rupees 58.06 to Australian dollar, maturing in the next 12 months. With this, I now request Reddy to take us through the key business highlights.
Thank you, Parag, and a warm welcome to everyone participating in our earnings calls today. As always, we appreciate your interest in our company. We are pleased to report a quarter with the highest ever revenue, EBITDA, profit before tax, and profit after tax. We saw growing momentum in our products and businesses. Our geographic diversification, productivity improvement in operations enabled operating margin delivery. We continued strategic progress on our various key initiatives to ensure that we are well positioned for differentiated and competitive growth. Let me take you through some of the key highlights of the quarter. Sales for quarter 2 grew 9% and EBITDA grew by 13%, reflecting the portfolio strengths and continued momentum in US and Europe. We generated healthy EBITDA at 32% and annualized ROCE at 39%. High cash generation leading to net cash surplus of more than $712 million at the end of the quarter. A few developments in our global biosimilar journey in the quarters include receiving of GMP certificate indicating closure of inspection by the UK MHRA for our Batchful biologic facility, a pre-approval inspection by the US FDA of our biologics facility based in Batchful concluded with 9 observations. We will address them within the stipulated timeline. CAR-T asset DRL 1801 approved for clinical trials in India. The leading financial publication, Financial Express and eCube, in a joint study, have named Dr. Reddy's as the leading company in ESG in India across sectors. The company received SA8000, a multi-site certification, includes CTO 6 CTO units, and 10 formulation units at biologics, and has been successfully audited and awarded compliance to ISO 20400 2017. This demonstrates organizational commitment to our social goals and accountability. We were conferred with the prestigious Golden Peacock Award for Excellence in Corporate Governance of 2022. Now let me take you through the key business highlights for the quarter. Please note that all references to these numbers in this section are in representative local currencies. Our North America generic business recorded sales of $384 million for the quarter, with strong year-over-year growth of 9%, while being broadly flat on sequential basis. The growth was supported by market share expansion in certain existing key products and complete integration of main portfolio, which more than offset price erosion. We launched 4 new products during the quarter. Our Europe business recorded sales of 59 million euros this quarter, with a year-over-year growth of 12% and sequential increase of 4%. The contribution from new product launches and improvement in base business volumes more than offset price erosion. We launched a total of 20 products across markets during this quarter. Our emerging markets business recorded sales of 1,016 crores rupees, a marginal year-on-year decline of 1% and sequential increase of 5%, primarily impacted by seasonality and unfavorable forex. While we may experience Q-on-Q volatility, full-year outlook is on track. We launched 32 new products during the quarter across various countries of the emerging markets. Within the emerging market segment, the Russia business grew by 4% on year-on-year basis and 9% on sequential basis in constant currency. Our India business recorded sales of 1,186 crores rupees and reported year-on-year growth of 3% and sequential increase of 3%. Excluding loss of revenues from NLEM-related price reduction, India business grew in mid-single digits. Our focus on profitable growth coupled with sales and marketing execution have led to gradual improvement in business performance. We further made following strides to access new growth levers and drive differentiation. We signed an e-licensing deal with Hungary NC Pirotinib. We launched Nerivio in India, our first digital therapeutic products addressing unmet needs of migraine patients. We launched a direct-to-consumer platform, celebitawellness.com, for serving the needs of diabetic patients in India. India remains our priority market and will continue to strengthen presence in core generic business while investing and building the innovation spaces. Our PCI business recorded sales of $85 million with a year-over-year growth of 5% and sequential increase of 4%. We expect sales to improve over the next couple of quarters on back of increasing volume pickup and strategic collaboration with regional and global players. We invested 7.9% of our revenue to empower and enhance our R&D competency. Our efforts are focused on developing value-accretive products, including several generic injectable biosimilars, where there is a patient need. We have done 6 global generic filings including 2 ANDAs and 1 NDA filed in the United States during Q2 of FY24, and are on track to accelerate on this in the balance of year FY24. We remain focused on building best-in-class capabilities and commercial infrastructure to leverage our portfolio to expand further. Our ability to adapt, strong execution, and financial muscles will enable us to grow our core business and build pipeline of products to meet patient needs. I am pleased with the progress that we have made so far this year, and that we have a clear plan in place to move forward at a pace to deliver on our key objectives and support the overall growth ambitions of the company. With this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Balaji Prasad from Barclays. Please go ahead.
Hi, this is Michaela on for Balaji. Thanks for taking our questions. Given India remains a priority market for you, could you just provide an outlook on your Indian market and just elaborate a bit more on the evolution in your India focus? Thank you.
So the main focus is, and the main effort is actually licensing and collaborating with the partners to bring innovation to India. This is the most important initiative that we have for India. In addition to that, we identify focus portfolio in which we are growing, and indeed, by the way, this focus portfolio is growing very, very nicely. The overall performance of the portfolio that we have today is growing in the mid-single digits. Part of it is also because, as per the plans, we have obviously signals that we have a price erosion as expected when we acquired it. It meets our expectation from business case, but naturally has contributed also to this decline. If you wish, the portfolio that we are focusing on actually growing double digits, and likely that's what you're going to see from quarter to quarter, that we are actually improving our performance.
Great. And just one follow-up, if I can. What kind of innovations in therapeutic areas are you targeting? And just how willing are partners to launch in India when you approach them about these deals? Thanks.
There is actually enthusiasm naturally, India is an important country. Everybody understands that. There is always concern about the price points, about the adoption of India has certain requirements that are relevant for to localize the product, whether it's local production or local trials or maybe different position of the product. But in general, people understand that India is an important market, important country, and they want to have a presence here, and they want to work very much with a reputable company, and we are one of them. Sorry, I lost your first part of the question.
Just what kind of innovations in therapeutic areas specifically are you targeting?
Yes, sorry about that. We are targeting primarily areas like cardiovascular, diabetic, and CNS, oncology, especially in area in which we can find standard of care or something that is better from the current standard of care. So what is driving us is primarily if we see an innovation that are addressing those areas. This is also the areas in which we, at least in our analysis, we find the utmost unmet need.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, thank you for the opportunity. So the first one on the 9 observations for the biologic plant that we have received. Can you please elaborate what is the nature of these observations and whether we need to undertake some corrective preventive actions here?
I believe that those observations are addressable. We are going to address all of them in the beginning of November. Some of them will require us to create a CAPA, which means that we need to produce certain products for certain period of time in order to show a certain consistency of data, which will take us to January. But overall, I believe that this is addressable.
Sure. And second one on the PFCI business. So if I look at the gross margin for that business has gone down. Obviously, there is some growth on a quarter-on-quarter basis and year-on-year basis. But is it primarily due to the unfavorable pricing environment? And if that is the case, do we get the benefit of lower API prices in our global generic business if that is like more widespread pricing decline in APIs?
I don't see such a decline in the API like it was in previous years. Most of the growth is coming when new products and launches that likely to happen by the customer of our API or for PCI business. So if you wish, we are now selling the API that will sell them in the next period of time, the next quarters. What we see now is the impact of the new portfolio that we worked on it in the last couple of years, which is replacing the old portfolio from the decade before. And as time will go by, we will launch more and more of this product, and you'll see acceleration in growth because of it.
And the gross margin for this business, will it also improve? Because it has come down to now around 13%. So as we grow the sales, we normally grow the gross margins because it's a kind of have a relatively higher level of fixed costs. So as you grow, you're also increasing your margin. That's what is likely to happen.
So now to clarify, the gross margin for this business we have reported is 18% during the quarter, not 13%.
Okay, sure. I'll check. Yeah. And lastly, we have mentioned price erosion in US as a growth drag, at least on a quarter-on-quarter basis, perhaps. Now this price erosion in this quarter, is it limited to few large products such as vasopressin, or it is more broad-based price erosion that you are witnessing?
The price erosion always affects certain products that went into either a bid or RFP or competitive situation in that particular quarter. It's never broad. But let's say relatively to other years, this year it's more moderate than we used to in other years.
So and lastly, on the same thing, the shortage situation and then some of the short-term contracts, etc. Are those opportunities continuing into quarter 2 and probably in quarter 3? That is what the trend you are seeing?
Yes, absolutely. Absolutely, the focus in the U.S. on continuity, service, and sustainability of supply. Absolutely.
Thank you.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thanks for taking my question. First, on the main acquisition, when we announced this acquisition, it had a revenue base of about 65, 70 odd $million. Post nearly 5-6 months of integration into the Reddy's portfolio, have you seen traction in terms of our ability to gain more volume, in the product? Because we don't see that in a product like NuvaRing, which is, stuck at that 2-3% market share. Or how should we look at that acquired portfolio going forward?
Each one of these products has different timing in which customers are putting their RFP or open for those kind of discussions. I believe that this will grow and will pick up volumes as these timelines will be there. So, and most of those discussions will likely to happen in the second half of the year. So far, I'm happy with this deal. It's meeting our expectations and likely that we will see growth in the next 2 quarters.
And on NuvaRing, sir, any reason why it's stuck at about the 2-3% market share despite the launch in Feb?
Timing of the discussions with customers.
Okay, understood. My second question is on the India business. We have guided to wanting to grow higher than the market, double digit in this business, but for several quarters now that hasn't been the case. At least if we look at the market data. When do we think we get to that growth trajectory and the collaborations and licensing that we talked about? When do you actually see that materialize and flow through numbers?
Likely that we are going to see it already this year, this fiscal. In terms of the innovation, what we see now is the launch of deals that we signed a year ago. So it takes about 12 to 18 months from the time that we sign a deal until you get your product's approval. Naturally, we need to go to the regulatory process. In some of the cases, we need to do clinical trials and then regulatory process, and then it takes a bit longer. And this is also right now the main efforts in terms of building the portfolio in India. In each one of them, it's about to bring the products that are either going to be the standard of care or better than the current standard of care. In addition, the products that we are focusing on in India are growing in double digits, and likely that they will be more dominant in the future in that respect.
So just to understand this correctly, we are saying that we will be able to achieve double-digit growth in India this year?
I believe that in the end of the year we should see a double-digit growth and to continue in the quarters after.
And how many of such licensing deals have we completed in India so far? Just to get a broad sense, and is there any monetary value that we can attach to? This is the potential market opportunity or market size of these deals.
So I hope I'm giving you the right numbers, but it should be around 10. And we are normally going for a product that will be at least 100 CR. And of course, some of them can be much more than that.
Understood. Thank you so much, sir.
Thank you. The next question is from the line of Saion Mukherjee from Nomura. Please go ahead.
Yeah, thanks. Sir, can you tell us on biosimilar rituximab, what's the timeline you're looking at now for the US and European markets?
We submitted it in April. We just got the pre-approval inspections, so we will answer it by November. So now we hope that it will stay on course, and let's say if everything will be okay, we will be able to launch it in the beginning of FY25.
Okay. And if I look at quarter-on-quarter revenue in the US, which is sort of flattish, Can you just share the dynamics with respect to main contribution, Revlimid, and the base business? How each of these buckets have moved quarter on quarter?
Most of the growth came from volume growth and the main portfolio.
Okay. And finally, on the US, how many launches we are expecting for the full year? How much we have done so far in the first half? And how should we think about material launches from your pipeline? If you can guide something in terms of timeline, where you could expect some, material launches to happen.
Sure. So this year we are still on track with the 25 to 30 launches. And we have identified a group of between something similar, 25 to 30 products, which are material that will be launched in FY25, in FY26, and FY27.
How many, sir? 25 products, you're saying, across these 3 years?
25 to 30, because, there's some uncertainty about time of approval, so that's what we can guide.
And when you say material, what kind of revenue potential typically, a product with material contribution would contribute?
It has to be at least with a single digit in millions of dollars of sales.
Okay. Yeah, thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Thanks for this opportunity, sir, and congrats for the great set of numbers. So first, clarification about the government grants. So in fact, in the previous year, we have seen something around 300 odd crores. In the first half, it is more than 200 crores that we have already booked. So what is the visibility here and how long this can sustain? And this is relating.
Overall, our PLI scheme and the other export incentives this year would be marginally higher than last year. But quarter on quarter, there is always a fluctuation because we have to recognize this in line with the entitlement sales growth that we show as per the scheme. So there are quarter on quarter fluctuations, but for the year as a whole, we will be higher than last year.
But this is sustainable, sir?
Yes, it is. It is. For the next several quarters, we expect it to be meaningful.
Okay, fine. My second question is about the sustainability of the US business. So basically, having seen the run rate of around $380, $390 million kind of quarterly run rate, and kind of the ramp of what we have witnessed in terms of Revlimid. So can we see a kind of progressive performance in the overall US business going ahead? I'm saying progressive because I believe in terms of the volume limit condition, whatever that is there in case of Revlimid, every 12 months that should see a kind of upward move. So considering that, how should we see the US business going ahead in terms of the quarterly run rate and all that?
The quarters can fluctuate. We discussed it in the past because the quarter is very much depends on the ordering patterns of this product.
Okay.
But overall, you should see growth.
Okay, fine, sir. And my second question is about this European business. So in the first half, both the quarters, we have seen a kind of very strong growth, more than 20% kind of growth. What is driving that? And is it the launch of the biosimilar, introduction of the new product, or even the pricing scenario? Any improvement in the pricing scenario there? Demand situation improving. Could you give some sense about the Europe? Why is it delivering this kind of growth, and whether it is sustainable even in the subsequent period?
So it's primarily new product launches. There is also some volume growth of the base business, and just more market share participating in more tenders. most of our growth coming from injectables and just winning tenders.
Okay. Since we are now seeing progress in regulatory point of view as well as the launch point of view in terms of biosimilars, so is it possible to share some update about the pegfilgrastim success in the US and non-US market, and or even generally for biosimilar, what is the let's say annual or quarterly run rate that we are currently having? If you can give some sense, that would be really helpful, sir.
So just to remind, PEG is not our product. It is a product that was part of the arrangement that was done many years ago with Medserono. That after that was brought to Fresenius. So they are selling it. We are getting only royalties. So by design, it's not a big amount. Most of our activities in the biosimilars today are in emerging markets, primarily rituximab and 5 other products, so India, Russia, and other emerging markets. We are ramping up that activity. It is very important to us. We are going to have in the next 2 years or so about 5 phase 3 of biosimilars to be launched globally, including the United States. And the main ramp up in biosimilars for us will be probably from FY27 onwards.
Okay. Just last one question, sir. See, in fact, obviously there is a kind of a strong cash flow that we have been seeing, also supported by Revlimid. But whatever the case be, we have been seeing a quarterly run rate of, let's say, 1,500 crore kind of a cash flow, free cash flow, and already we have a 6,000 odd crore kind of a cash in books. So could you give some sense what incremental growth this fund can add to the overall visibility of our growth for next, let's say, next 1 or 2 years, or over a period of 3 years?
No, the beauty of that is that we can use this money for deals. Now it depends what deals we are going to have and in what multiples we will have them. I hope I understood the question right. So if it will, what we want to do with this money is primarily to use it for inorganic activities, which can serve us both in the short term, like we did with Maine, as well as in the longer term, for example, to acquire assets or products that we can launch in years after. But absolutely, this is the main use of the money, and this should help us to generate growth. But the timing of it, of course, is not certain because we don't know what type of deal and when it will impact us.
Sure. Yeah. Thank you, sir. Wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Aman Veech from Astute Investment Management. Please go ahead.
Yeah. Please, sir. Question is on our diabetic portfolio. So if you can talk about how well are we placed as a company to take the advantage of the upcoming GLP-1 opportunity that is coming. So I believe we have some FTF filings in that. So in terms of launch ready, are we ready? Whenever the expiry happens, we'll be there. And do you think this product category can be like a $300 to $500 million kind of category for in the next 5 years?
So we are going to be there, definitely, day one. And as for the size, I don't know, but obviously I have a great belief in this category.
I'm sorry, in terms of the important dosages, are we present in all of them? And if you can talk about the same.
We don't want to discuss specific because we did not make it public, but we should have all the relevant ranges. Depends on the geography and depends on the country, but we see this category as a global category for us to launch in all the markets that we have a presence.
And you are saying we are ready in terms of whenever expiry happens, if we have FTA file, we can launch in the next day itself.
We are ready.
Sure. My second question is on this other biosimilar, which I think we have on the osteoporosis side. If you can talk about the opportunity in US, because I believe there is a patent expiry coming up. So are we planning to launch in the US market? And if yes, do you think we can take like...
Which product?
Yeah, I was talking about osteoporosis, terapetide, and there are one or two more products that we have. So I was trying to understand that US patent, the expiry is coming up. So do you think we can have a good market share in US market with our biosimilar?
Yeah, so I'm not calling teriparatide biosimilars. For me, these are still equivalent to small molecules. So biosimilars I normally look for products that are bigger, like the MABs, etc. But specifically for this product, absolutely, I believe that it will be very nice for us, and we will be ready to launch it when it's possible.
Sorry, on the timeline, so I believe it will be in the next few months only, right? On the US launch of this product.
I don't want to stipulate on time at this stage.
But we are ready to launch whenever it happens.
We will be ready.
Sure. These are my questions. Thank you.
Thank you. Participants, you may press star and one if you wish to ask a question. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity, sir. Just on this e-commerce foray, so we'd like to understand, what kind of the strategy behind it, what kind of investment are we thinking in this particular foray?
Investment of what, sorry? In e-commerce? It's not a big investment, but it allows us additional channel for our product as well as other nutraceuticals. And I believe that it's a very nice, another channel and another part of the capabilities that we have now in India. But it's not a big investment.
Okay. But in addition to the typical nutraceutical products, will we be also having this prescription-based product on this platform?
No, this specific platform is direct to consumer that you mentioned, which means it's nutraceuticals and products that do not require prescription. OTC.
And so secondly, just on the trade receivables, there's been reasonable reduction if I compare quarter-over-quarter. Any read-through over that?
Sorry, Tushar, your voice is not clear. Can you repeat that question?
Is it better?
Yeah.
There has been good reduction in the trade receivables quarter-over-quarter. Any read-through over there?
It's normal. There's nothing unusual. I think it depends on the credit period and the cycle and the receipt of orders. So we obviously keep a very tight track of all our receivables and collect on time. So nothing unusual in this. Yeah.
Okay, sir. Thank you. Thank you for this.
Thank you. The next question is from the line of Devang Saraugi, an individual investor. Please go ahead.
Sir, are we looking at any 545(b)(2) opportunities in the US market?
Sorry, which opportunities in the US market?
505(b)(2) opportunities.
For which product? Sorry.
In general.
505(b)(2) that requires a sales force, we will not do. 505(b)(2) that is interchangeable, we would love to do.
Okay. And what would be the price erosion for the quarter?
What is the
Price erosion. The price erosion, we are finding the trends to be stable, Prashad. So if you look at the last few quarters, we had seen price erosion moderating, and we are now seeing it around the same level. So, but from one quarter to another, it will typically fluctuate between, say, high single digits to low double digits.
Okay. And are we going to see any price increases as many suppliers are going out of the market?
We are not building.
Or it will be product specific.
It's normally a product specific, and we are not building on that. If there is a shortage situation, and we will supply, but we are not building into our models any price increases.
Thank you, sir.
Yeah, whenever there is an opportunity, it's opportunistic, not strategic. Yeah.
Thank you, sir.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. My question is on India business. So first of all, can you tell us how much India sales is currently contributed by chronic therapies? And then second part of my question is how many sales representatives you have for your India business, and do you have plan to expand on it?
The chronic is about 35% of the business, and as time goes by, because most of what we will launch, especially innovation, will be more chronic in nature, this will grow. As for the numbers of salespeople, if I remember correctly, it's a little bit more than 6,000 people, and will grow as we will bring the innovations. So accordingly, we will adjust the numbers.
Okay, but right now you do not have any particular need to expand your sales force. As you said, you're focusing more on innovative products. As in when you launch, you will decide accordingly.
I don't see a need to increase. It's more about the productivity of the team and the coverage of this team. But it's not so much about the numbers of the people. But if we need more, we will have more.
Okay, I think this question was earlier discussed. So India, despite many efforts from your end, we have been seeing sales largely remain range bound, somewhere say 12 billion a quarter or so. So when we can see a significant step up coming up? So any timeline if you can indicate, because I guess for last 6 to 8 quarters, sales were broadly in this range.
I think you're going to see an improvement already this year. I think indeed we took 2 decisions about India, just to remind, and this is the effect that it comes with it. One, we decided to focus, and we actually made quite a few deals of divesting brands. So we kind of trimmed down the base portfolio, because we do not believe that, of course, the changes that will happen with all the challenges that branded generics will have in India, these brands likely to be successful, and we felt that it was a good deal for us. And second, we also acquire a brand, for example, Sitmus, which we knew at the time that it would face price erosion. It matched the business case that we had on it. I believe that already the brands that we are focusing on are growing in double digits, plus we are going to launch more and more innovation and have more and more collaborations. So you will start to see this year, and as we will add products to the portfolio, it will continue to grow. It's a focused market for us. It's a strategic market for us, and we will grow it.
Sure. My second question is if you can talk a bit about your progress for the China market, how many approvals you have got, and what kind of filings have been done so far.
We are actually very pleased with the progress over there, especially since April, where the number of approvals start to pick up. And I think that we had 4 approvals, and this month I think we got additional 2 approvals, so 6 altogether. And we are also filing more than 15 products a year now. I think we can get even to 18 if everything will go well. And most of our products are among the first wave and normally among the first 3. So it's a very interesting area for us in China. At the time we thought that the ramp up will be earlier than what I communicated in the past, but COVID, zero COVID, and also our own execution may be late, but now it's absolutely very good.
Sure. So with this portfolio build up, should we assume China portfolio could start contributing meaningfully from next fiscal, or it will be a bit long term in nature?
No, for next fiscal, absolutely.
Okay, that's helpful. And my last question is, how should we look at your R&D spend going ahead as you focus more on differentiated products for your global segments?
Likely that it will grow because we are investing more and more in biosimilar. So we will continue, of course, to invest in the new molecules. So you're going to see a moderated growth, but also the sales will grow. So let's say in terms of percentage, it should be give or take in the range that we have today. Maybe a bit higher. Yeah.
Okay. That's helpful. Thank you, Rich.
Sure.
Thank you. The next question is from the line of Gagan Tareja from ASK Investment Managers. Please go ahead.
Yeah. Good evening. I hope I'm audible.
Yes, you're audible, sir.
Okay. So the first question is on the India business. If you knock out the discontinued products from the base quarter 1 or 2Q of FY23.
Sorry to interrupt. You are audible, but I think you are too close to the mic.
Okay. Is it better?
This is much better, sir. Please go ahead.
Okay. So my question is that, adjusting for the discontinued products, what would have the India sales growth been year-on-year for the quarter?
So without these products and without NLEM, we are about mid-single digits for the quarter.
Okay. And for US, from 1Q to 2Q, would there have been a material difference in the Revlimid sales for you?
I cannot discuss the quantities of the Revlimid sold.
No, I don't want you to enumerate the number. I'm just asking, would it be a reasonable assumption or inference that there won't have been a material change in Revlimid sales from the first quarter to the second?
Most of the growth, like Ray said earlier, has come from the base business and also the main portfolio.
Okay. Right. And India, is it a correct surmise that you're saying that India, you'll exit FY24 with a double-digit sort of a growth rate? That's Q4, you'll be able to do a double-digit sort of a growth rate, and you will probably be improving from 2Q to 3Q and from 3Q to 4Q. Is that a correct inference?
That's what we are trying to do, absolutely.
Right. Okay. Thank you. I'll get back in the queue.
Thank you. The next question is from the line of Sayon Mukherjee from Nomura. Please go ahead.
Yeah, thanks for the follow-up. My question is around, you mentioned about inorganic activities. The cash balance is significant and it could continue to rise. If you look at, the acquisitions and deals that you've done, they are much smaller in size. So one is that, it seems that, so basically the question is, are you looking at larger deals going ahead? Is there more activity that you're seeing on the M&A side? And related to that, what's the level of leverage that as a company you would be comfortable with?
So we are looking for all deals, small and bigger than usual for us, as needed, but we are not in a rush. It has to be a good deal. It has to be something that will match our strategy, something that we believe can contribute to our growth, either products that we want or capability that we are missing. We are not in a rush to spend this money. In that respect, also the money is yielding very nicely now by investing it. We are, as we speak, we are participating quite a few processes, and we'll see what we need. Likely that we will spend eventually this money, but it's important for us that it will be the right strategic deal for us. We are not looking for transformative deals. We are looking for complementary activities to our organic strategy.
And any view on leverage, Parag, as to at what level of leverage you would be comfortable with?
See, we can, I would say, 2 times EBITDA is what we would be willing to go for. Beyond that, we would not like to take a financial risk.
Okay, thank you.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thanks for the follow-up. Parag sir, on the SG&A expense, that seems to have inched up, quarter on quarter. Just wanted to get a sense on, where are we investing and how should we look at that number, over the next few quarters and probably FY25?
So overall, Neha, the increase in SG&A, if you see year on year, I think they've gone up by 13%. Apart from the normal inflation, it's largely because of investments behind our brand. Also, we are investing in digitalization. I have spoken about it a few times, extensively, both in the front end as well as in R&D and in our manufacturing facilities. Like last year, FQ3 was named as Digital Lighthouse. We are now working on getting more facilities certified as a Digital Lighthouse, because we believe that in the medium term, this digitalization is going to make a big impact by improving quality, reducing quality incidents, improving productivity and costs, and so on. So these are the areas where we are investing. If we look at overall quarter on quarter, we will see fluctuation, but in aggregate SG&A as a percentage of sales, last year we were around, it used to be a few years back, we were at 30-31%, and we have been gradually dropping to 29-28% kind of a range. So I wouldn't like to comment on quarter, but for the full year, I would say, that's the range we'll be around.
Got it. Thank you so much, sir.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, thank you for the opportunity again. So the first one on the in-licensing innovation deals that we are doing for India. Can you highlight what is the typical payback period for these kind of deals?
So normally the payout is very good because we hardly putting down payments for that. So most of the deals have very small down payments, and normally we are getting healthy margins that enable us to buy in a transfer plus investment. So normally the payout will be within the the first 3 years take into account the time that it takes to build brands. So most of the investment is actually not because of the payout to the partner, but rather the investment in building brands in a country like India, which normally takes about 3 years.
Sure. And let's say for markets like India, are these deals, some of these innovators would be doing it more on a profit share basis, or are they more interested in, let's say, upfront payment and then some royalty?
So most of the deals will be certain milestones and some royalties, and giving us the flexibility to market it in the place that we want and with the right mix of SG&A. So that's normally will be the case, but we will also have cases in which it will be a profit share.
Sure. And second question on the biosimilar business, now that we are kind of close to launching our first biosimilar in US, probably somewhere in FY25, what type of front-end investment would we be looking for sales force or the formulary access personnel, and how much drag it could be on our SG&A?
So the product that will be launched, the rituximab that will be launched in the US, will not be launched by us. So this is a sales force that is with our partner. The products that we will launch will be from FY27 onwards. And for that, we will have to build a sales force.
Okay, perfect. Thank you, and all the best.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, just one clarification I wanted to have. In terms of the margin profile, let's say for India business and the base US business, let's say excluding Revlimid. So what could be the differential in terms of the margin profile of these two businesses?
We don't disclose geography-wise margins, but I can confirm that the margin profile of India business would be better than our North American business.
Okay. And even the Russia would be similar to India or slightly lower than India?
Yeah, Russia is also a branded generics market, and therefore its margin profile is also quite healthy.
Okay. Sure, sir. Okay. So that means Russia is in between of India and US. That is how we should think.
No, I'm not ranking the market. I'm just pointing out that both Russia and India are branded generics business, and therefore their margin profile is better than the unbranded businesses in US and Europe.
Sure. Okay. Yeah. Thank you, sir.
Thank you. We have no further questions. I would now like to hand the conference over to Ms. Richa Periwal for closing comments. Over to you, ma'am.
Thank you all for joining us for today's evening call. In case of any further queries or clarifications, please do not hesitate to get in touch with the investor relations team. Thank you once again.
Thank you. On behalf of Dr. Reddy's Laboratories Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.